Where can investors run and seek shelter? Joining me today for this special edition of Kitco News is Phil Streible, Chief Market Strategist over at Blue Line Futures. Phil, thanks for joining us remotely here for this breaking news day.
Yeah, thanks for having me.
So, with us fully and officially in quantitative easing here, Phil, where do we hide? As we know, bloodbath in equities, in commodities, Bitcoin, where do we go?
Well, it seems like the only place that anyone found any real safe haven was in the bond market, but with yields, dipping back down below 0.64, I think that there's not much room there onto the upside. We keep seeing compressions and volatility. The VIX failed to make a higher high. We saw some of the double short ETFs on the stock indices. They folded up right away. We are having a bit of a recovery here in the metals markets. The metals are a tough play. I think you really got to be more in a physical rather than some of the leverage products, and you definitely want to, I think, avoid the miners because they're really going to get squeezed from all areas.
And as we know, Phil, usually during the start of a bear market, gold tends to plunge and then rises back up with inflation. Do you think we'll see that pattern repeat again here?
Now, that's what I think in the later part of the year. Once we kind of get through this, this is kind of we're in crisis mode right now. Once we get through the virus itself and we focus more on the economic aspect of it, I think it's going to be a very quick recovery. We saw gold bounce sharply off its lows. The key level I think that you got to look at on gold's 1508. That's a 200-day moving average. If we don't close below there, I think we're still in a pretty healthy market. It's just the fact that they get dramatically over leveraged in the markets. You've got a lot of short sellers out there that squeeze the markets. And the problem is that U.S. equities, they came in at on the low. They were lock limit down. They've got brokers calling them, telling them that the S&P, once it reopens, it's going to have another plunge lower. You've got to sell any assets you have that are open and trading right now. Unfortunately, gold futures, silver futures, and crude oil were all, the victims of that sell-off.
So when you saw the news yesterday that the Fed, slashed rates near zero here, how badly, and it doesn't look like they're going to get it. Things can change here drastically, but how badly did they need a close today in the green?
Well, the gold market had initially shot up. It was $35, $50, $65, and gold looked fantastic going into it. But as I spoke with, one of your fellow colleagues, we were discussing on the phone right when it opened that we wouldn't be surprised if we saw gold futures go unchanged and even lean negative. It's just a dramatic sell-off in the U.S. equities and the pressure that we've already seen. A lot of people, over leveraged in the markets, continuing to have to liquidate any of these great assets. I can tell you one thing. I called around the last couple of days trying to buy physical metals, specifically physical silver, and silver was $1.50 to $2 over spot. So there is an underlying demand that's out there right now, just more on the physical side.
I'm happy you brought that up. I brought that up with Bill Baruch, your colleague. We ran a story how the U.S. Mint cannot keep up with silver demand, and I will ask you the same question: when does that start getting reflected in the price of silver?
Silver's a little bit tough because that aspect of it only makes up a small percentage of the total demand. Unfortunately, silver, 60% of it is fabrication and in the manufacturing process, and that's been the most largely hit, sector. So silver demand from that aspect is down quite a bit, but you need to use, this is why you always need to have some powder dry, and you need to come in there and really allocate those funds towards physical silver.
Phil, how do you compare the situation, this moment we're living now, to what you lived during the financial crisis of '08? Obviously, that was a banking crisis, a man-made crisis. How different is this scenario for you as a trader?
Yeah, but if you look, the situation's completely different. However, the price action in the market is very similar. So when Lehman Brothers went down, gold futures made a higher high at the morning. We thought, oh man, this is great. We've been positioning long metals forever. And by the end of the trading session, the market was lower on the day. So you need to use these green shoots that you get in the charts, when you get these thrusts up like this, 50, 60, $70 move up, don't be afraid to either sell a call, use that money to buy a put,
Yep.
or trail a stop loss on there. I don't like stops on these because of the fact that you're probably going to get stopped out and whipsawed out. The options, there's a lot of premium in the put options, the protection. Everybody's going for life insurance right now, and premiums are going up. So you need to be able to sell something against it. Sell a call option, use the money to buy a put, but don't leave yourself with any open risk.
Finally, Phil, as we wrap here, is a recession inevitable for you? Is that the path we're on?
I really think so. I mean, it kind of feels like it. Although once, it's going to be a short-dated recession. So we're going to need to look and see like how long these things normally last, because I think it's going to be able to tail end of the curve on this. As far as is it a 3-month, 6-month, 9-month? I don't think that this is going to take years and years to come back. As we see China already, those Apple stores are already open, the Starbucks are open, sporting events are already open over there. So they've really turned the corner. It's only been a few weeks.
So would you call it a black swan or a blip?
No, it's definitely a black swan. I mean, this is pretty bad. I mean, there's people that are going to be, financially destroyed on this thing, and people are losing their lives. So, I mean, that is definitely a black swan event. A blip is more like a miss on an economic number when economics have been great all the way to this point. A miss on a non-farm payroll, okay, or something like that. That's more of a blip.
Phil Streible, thank you so much for joining us for this special edition.
Yeah, thanks for having me.
And thanks for watching. Be sure to stay tuned to Kitco.com.